Three of the most famous companies on Earth today are racing to go public, and the biggest stock market debut in history is just days away. SpaceX, OpenAI, and Anthropic. But most people will buy these on the name, not the numbers. Today, I'll show you how to do the opposite. How to read a company's real financials before you invest $1. Here's the plan. First, let's see where all three companies stand right now. Then, I'll walk you through the three most important sections to review on SpaceX's recent SEC filing. Lastly, we'll talk about the IPO traps to watch for. Okay, let's dive in. These three are not in the same place. SpaceX is closest. It's at a fixed price of $135 a share, plans to sell about 556 million shares to raise roughly $75 billion at a valuation near $1.77 trillion. It's set to list on the NASDAQ under the ticker SPCX. That would be the largest IPO ever. Anthropic and OpenAI are a step behind. Both filed confidentially in early June, and that word matters. A confidential filing is a start, not a countdown. The SEC reviews the paperwork privately, and the company owes you no date. OpenAI literally said its timing is undecided, and it may be a while. So while some headlines lump all three together, only SpaceX has real numbers today. That's why our deep dive today is SpaceX only. Before the numbers, you need to know where they live, a document called the S-1. When a U.S. company goes public, it must file an S-1 with the SEC. Think of it as the company's first honest autobiography. Business, financials, and risks. It's free on the SEC's EDGAR database. If you haven't already, go to the link I dropped in the description below and open up the S-1 so you can have it side by side. I'll walk you through the most important things to check as we go. Now, it runs over 300 pages, but here's where a beginner actually should look. Three parts do most of the work. First, the numbers. The financial and operating data, paired with management's discussion and analysis, where the company explains those numbers in plain English. Second, the risk factors. The section most regular investors skip and most professionals read first because the company is legally required to list everything that could go wrong. And third, the use of proceeds. A short section that tells you whether your money funds growth or just lets early insiders cash out. We'll take them in that order, then close with the IPO traps that apply to any deal. Let's go to the financial results in the prospectus summary near the front of the filing. Look for the bullet list of financial results. The first number, in 2025, SpaceX generated consolidated revenue of $18.7 billion. That's all the money coming in the door, and it grew about 33% in a year. But lesson one, revenue is not profit. That same year, SpaceX posted a loss from operations of negative $2.6 billion. So how does a company pulling in nearly $19 billion still lose money? Spending. Enormous spending on the future. We can see the same trend as of March 2026, where the revenue is about $4.7 billion, and it still had a loss from operations of $1.9 billion. Now, the most important idea in this whole filing, there are two very different profit numbers here. The negative $2.6 billion loss from operations we just looked at is the official figure after the real costs of running the business. However, there is also adjusted EBITDA. $6.6 billion in 2025. In plain terms, that's profit before subtracting big costs like equipment wearing out and stock paid to employees. Companies love this number because it looks healthy. The filing even flags it as a non-GAAP measure, a number the company defined itself, not the official accounting standard. Both numbers are valid, they just answer different questions. Your beginner rule. When a company leads with EBITDA, but the official number is a loss, always ask what the difference is. In this case, the difference is investment. Now, where does the money come from? If you go down to the segment breakdown in that same summary, you'll see SpaceX is really three businesses, or segments: space, connectivity, and AI. Connectivity, or Starlink, is the obvious profit engine. In 2025, it generated income from operations of $4.4 billion, real official profit. And it kept climbing, posting nearly $1.2 billion in the first quarter of 2026 alone. Once those satellites are in orbit, each new customer costs almost nothing to add. Next up is space, the original rocket business. It posted a loss from operations of negative $657 million in 2025 and roughly the same, negative 662 million, in the first quarter of 2026 alone. Notice that, nearly a full year's loss in a single quarter. Why a loss while launching most of the world's payloads? Because space is pouring money into research and development on the next generation Starship, about $3 billion in 2025, and another $930 million in the first quarter of 2026 alone. That's a company spending today to launch bigger tomorrow. Last is AI. SpaceX acquired the artificial intelligence startup xAI in February 2026. Its AI segment showed a loss from operations of negative $6.4 billion in 2025 and negative $2.5 billion in the first quarter of 2026 alone. In plain terms, Starlink's profits are quietly funding the AI dream. So, put it together. The headline is a $1.77 trillion space company. The numbers reveal the truth. A wildly profitable internet utility, funding a hugely expensive AI bet, wrapped inside a rocket company. Not good or bad, just what the financials tell you that the headline doesn't. Okay, there are two more sections every investor should open before buying. Risk factors, page 26. This section of the SpaceX S-1 filing is uniquely extensive, reflecting a business that blends extreme infrastructure development, a massive artificial intelligence build-out, and highly unconventional corporate governance. The core risks disclosed in the prospectus are categorized into four critical areas. First, operational and technological dependence, the Starship bottleneck. SpaceX flags that Starship is still in development with delays among its top risks. Second, radical AI expansion and capital burn. Because SpaceX absorbed xAI and X Corp, the prospectus reveals a significant pivot into heavily capitalized software and data center infrastructure. Third, corporate governance and unprecedented Musk risks. The structure is unusually founder-friendly. Musk holds roughly 42% of the equity, but keeps majority voting control, so ordinary shareholders have little say. Fourth, macroeconomic and customer concentration. About 21% of SpaceX's 2025 revenue came from a single source, the U.S. federal government. Delays in federal budgeting, shifting geopolitical priorities, or regulatory compliance crackdowns represent an outsized risk to the launch and Starshield divisions. One more for retail investors. Reportedly, up to 30% of the offering is reserved for retail, about 3 times the usual share, which can mean bigger price swings. Lastly, you need to look at use of proceeds, page 66. Does your money fund growth or just let early insiders cash out? And while you're near the front, note the share structure. SpaceX will have 2 classes of stock. Class A gets 1 vote, Class B gets 10. The founder keeps majority voting control, which the filing itself calls a controlled company. You can own the stock and still have almost no say. All right, now that we've digested the core of this S1, watch out for these 4 traps before you ever click buy. 1. The pop and drop. The price when trading opens is often not the IPO price. Hype can spike it, then it falls. Don't chase day 1. 2. Lockup periods. Insiders usually can't sell for around 90 days. When that window opens, a wave of shares can hit the market and pull the price down. 3. Voting control. As we just saw, dual-class shares can mean you own the stock but not the votes. 4. The quiet period. Right now, the company legally can't hype its own stock. So your best information isn't a headline or a social media post, it's that S1. To wrap up, follow this list to be the proactive investor, not the hype chaser. 1. If you haven't already, go to SEC EDGAR and open the SpaceX S1 yourself. 2. Digest the most important numbers we talked about, revenue, and the 2 profit figures. 3. Read the risk factors. 4. Read the use of proceeds. And one more thing, OpenAI and Anthropic don't have public financials yet. But the moment they file their S1s, I'll break down their numbers and important factors the exact same way. Subscribe and turn on the bell now so you don't miss it. Thanks for watching.